Hey YouTube, this is Zach with Achilles Financial. Today I want to talk to you about Plug Power because this is a stock that I am going to heavily encourage you to stay away from. I don't like this stock, and today I'm going to talk about the reasons why. Now let me go ahead and offset this with whenever I talk about a hit piece or a negative view of a company. This is just my opinion. Feel free to take it or leave it. However, I am looking out for your best interest despite the fact I'm not a financial advisor. But if you find this content helpful, please leave a like and subscribe. So without further ado, let's get into this. So Plug Power is a stock that just last year was trading under $4 a share. And this is a company that is heavily involved in the hydrogen fuel cell industry. Now, what they just went through is they had a negative report and a series of downgrades because they filed their 8K yesterday, which is an SEC filing, which if you're using TD Ameritrade, they make this easy for you. And they have the capability, again, they filed these 8Ks yesterday. So what does that mean? Well, they came out and they had to restate certain items on their financial statements. So this is something that their auditors had them do. And this is not common in the stock world. So that is issue number one. Based off of that restatement, you can see that actually a number of companies downgraded their price targets. Admittedly, they downgraded them after the stock went down. I don't hold a lot of value in price targets from these analysts. The other issue that I have with Plug Power is that this is not a new company that is coming out of nowhere. Rather, they have a history of they have been around for years. You can look at the 20-year chart. You can see that the company actually had its heyday back in 2000. So right at the dot-com bubble, they were able to go through that process. And you can see that despite the fact that they were back at this price point way back when, they actually had significantly less shares. So the company was actually a lot more valuable during the dot-com bubble of 2000, 2001. Now, despite the fact that this company's been around for 20 years and never had any profitability and keeping in line with, I would say, normal results, over the past 12 months, we saw that Plug Power actually went north of $72 a share. I think it top ticked at, there it is, $75.49, somewhere in that range. So they had an incredible run. For those of you who actually own shares back during this time period, I applaud your capability of holding, and I hope that you were able to capture and sell out during some of this huge uptick. However, I want to highlight a few issues with the company so that you don't necessarily look at the message boards that are going around and say, hey, this stock was just at $70 a share, it's going to go back there. Keep in mind when we're looking at the fundamentals here, the very first thing I will highlight is they had to make restatements. Now, none of it was to cash flow, but that doesn't really necessarily affect them because as you can see, their cash flow from a net income perspective has always been negative. Even from a revenue perspective, you can see that it was even grossly negative. Now, the reason that it was negative in 2020 is because that in 2017, in order to get a deal with Amazon, they sold stock warrants. Warrants are similar to options in that they give you the right to buy a group of shares at a certain price. And so they gave Amazon the capability to purchase shares at $1.20 per share, and Amazon cashed in Q4 to the tune of $300 million. Which means that the total revenue that the company had actually was negative because they had to basically pay out their own stock to be able to provide Amazon with that revenue. So again, it went negative here, but Amazon had an excellent investment there. So that was a one-time hit, which is why you see that total net income here for 2020 is all the way down here at income after tax, negative $562 million. Keep in mind, this company is not operating with a great cash position, so I can anticipate that they are going to be raising money for new shares, which they have already done twice in the past 12 months. So you can see here they have cash and short-term receivables of $43 million. That is despite the fact, so again, this company, $43 million, their total assets is $2.4 billion, and they just had to pay basically 20% of this out in negative revenue. So the short-term play here is I'm hesitant to short this company because I know that there's a lot of hype about them, and you'd have to get a little bit of time, and the options premiums are juiced. However, this company is 100% going to issue more debt to be able to continue operating. They just don't have enough cash on hand. They don't have enough assets on hand to continue burning at the rate that they are burning. So you can see again that income statement. This is a company that is notorious for constantly losing money. You can even see from a cash flow perspective, even if we look at it from a quarterly basis, that we are going to have continued cash flow from operations is continuously negative. These are quarterly numbers. You can't have negative $157 million. So this is what we're looking at here from a company perspective, and everyone is saying buy, 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 but they don't make money. So let's talk about their plan. How are they addressing this? So this is their investor presentation that they provided last September, which is noticeably absent of a number of different items. The chief thing I want to highlight here is they have made the statement they are actively reducing the cost to install. They are actively reducing the cost. Yet despite the fact that the cost is 50% of what it was in 2010, they are losing more money today than they were at that point in time. They say that it gets better and better every single time we have these gross margins go up, but during this same time period of 2014 to 2020, I will reiterate, they have continuously lost money. Again, every time they say things are getting better, they continue to lose money, and they say that they're going to have in 2024 $1.2 billion in sales, $200 million operating income. They can go and spend this, and $250 million in adjusted earnings before tax and income, or in adjustments. If we are looking at these numbers, I fail to understand how the same group, the same management team, the same company that has been driving this company lower and lower in value over the past 20 years is now worth $20 billion and is the highest weighted stock on the Russell 2000. Why would I invest in this company whose management has continuously shown that they fail to meet expectations? They continuously have to make restatements. They have to change what they're saying. They continue to fail. Why would I invest in that company when there are so many other better options? Now, that being said, if you're looking at this as a price point of, hey, we can take advantage of this because of the new administration, we can take advantage of this because this is a new green energy company and we really like green energy. I completely understand where you're coming from, and I just want to point that there are a lot of other companies that are involved in parallel industries or even the same industry who are being ran a lot better. If you are saying, hey, I already made a lot of money, I will heavily encourage you to continue making money off of this company if you view it as a potential trade and not as a long-term hold. All of this being said, this is just my opinion. I have been wrong before, but this is something that every time this company says it's going to get better, they have a proven track record of failure. This is a company that is not new within the past 10 years, but its highest valuation was in 2001, and since then all it's done is devalued their shares by issuing more, so there's more dilution, as well as they've continued to lose more money, including, albeit because of odd circumstances, negative $100 million in revenue in 2020. So I'd love to hear your comments down below, or if you want to talk to me about it, feel free to check it out in the Discord because we'll talk about it there. But I am more than happy to hear your opinion. So if you found this content helpful, please leave a like and subscribe. Thanks everyone. Talk to you later.